thanks, Bethany, and thanks everybody for joining. Good morning, good afternoon, good evening, wherever you're zooming in from around the world. Thanks for spending some time with us. So just a couple quick thoughts from me. Super excited to be co-branding this webinar with our partner and friend Idris of Relevation, and on perspectives on venture investment in real estate tech. So just a couple of quick thoughts before I do what I do best, which is shut up and listen to our wonderful colleagues that we've assembled. This is such a great topic for me, and it's so timely because I haven't really done much on venture in a while on CREtech. And I remember when I got first into the space, into the real estate tech ecosystem, I don't know, 8-10 years ago or so. And I remember, we would get giddy if somebody got a funding round that was a 2 million, 2.5 million or something like that. It was just shocking because the ecosystem was so young and so new. And now, if we don't do 2.5 billion a month, it's sort of like a down month. And I think that, today, what I'm really excited to talk about with this great panel is it's no longer, is this real? Is it sustainable? It's friggin' real. It's definitely sustainable, and it's changing the entire built world. But what we're going to talk about today is, where the money's going, how it's impacting the industry, what sort of important trends can we unpack that are happening in the tech sector that venture and investment dollars are leading. So it's less about, how much and more about why, how, and where, which I'm super excited about. And I think it reflects the evolution and the maturity of the space. So it's great timing for this. And then lastly, I just want to say that I remember during the pandemic, which was a horrific year for so many people, one of the bright spots for me was I met this young man who was sort of everything I am not. He was young, he's handsome, he's intelligent, he's articulate. And Idris, obviously, what I'm talking about you. And he told me
I don't have a beer.
He told me what he was thinking about and building with Relevation. And I said, I want in. I want to be part of this. So we invested in the company, and I couldn't be more excited and delighted to be partners with him on this upcoming event in June, which he'll talk about. So without further ado, let me go through each of the panelists and ask them to introduce themselves quickly. Ladies first, as always. Valentina, if you could introduce yourself to the audience.
Thank you, Michael. And thanks. That's great event, great setup. Valentina, managing partner of Reach UK. Reach UK is a scale-up program for technology startups launching themselves into real estate. And I come to this with more than 15 years of experience in real estate, direct real estate investments in private equity format, real estate development company, and then a number of years in real estate investment banking. 2018 was the year of realization for me that real estate has got to change. And that was the year when I changed my career path as well, becoming a real estate technology investment specialist. And yeah, so far I cannot agree more, Michael. This trend has been only accelerating, and this is no longer a question of if, it's more the question of how.
Yeah, wonderfully said. Greg, if you could introduce yourself, my friend.
Sure. Hi, so I'm Gregory. I'm the founder of Proptech. We're a European VC firm focusing on the disruption of the built environment. We're currently investing out of a 250 million euro evergreen fund. We invest from Series A onward in a stage agnostic manner across Europe, US, and Israel.
Terrific. Ron, you say hello to introduce yourself?
Yeah, hi, I'm Ron. I'm the founder of Accelerators. We're a very focused fund. We only focus in smart building technology, a real subset of the Proptech world, crossroads of AI, IoT, and sensor technology. We do seed and early stage, tickets from 500K up to 3 million. And we're, like Greg, also an open-ended fund, which is becoming a trend apparently. And one of the things that we really want to do, as we are so focused, is to create an ecosystem amongst not only our portfolio companies, but also other seed and early stage companies that we meet.
Wonderful. Idris, my friend, my partner, if you could introduce yourself, talk a little bit about also Relevation, what's coming, what you're most excited about.
Yes, sure, great. So I have three different hats. I'm the founder of Proptech Lab, which is the real estate innovators network here in Belgium, so very local network. I'm also the co-founder of the European Proptech Association, representing roughly 3,000 Proptech startups and 26 national Proptech hubs. But most importantly, I have also launched Relevation, which is the digital fundraising summit for Proptech. But before that I present a bit Relevation, I would like just to share a couple of thoughts on the size of this space of investing in Proptech, because we calculated that roughly more than 108 billion US dollars were invested in the Proptech space so far. And there is still more than 125 billions that will be deployed in the next 5 years. So it's really a huge space. Coming back to Relevation, when the pandemic started in March 2020, we really were monitoring 3,000 Proptech startups with the European Proptech Association, and we saw that roughly 50% of the Proptech startups based in Europe could have liquidity issues due to the pandemic, to the hibernation of the economy. And so I decided to launch Relevation as a digital event where founders can meet VCs to ease their fundraising, but as well where VCs can meet LPs. And I think what really differentiates ourselves from other digital events is the idea of being a transactional event. So we are not an educational event where you have maybe sometimes low engaging content, but we really want to be a transactional event where the core value is the matchmaking, the networking, and allowing the attendees to create meaningful relations. We started as a 2-day digital event, but the ambition is to become a sort of reference in this space of investing in PropTech, and to contribute to define the industry standards, to bring more transparency, more efficiency in the space. And so we'll produce as well a number of reports exclusively available for the attendees about the valuation trends, exit multiples, the fund performance in an anonymized base, of course, etc. And so basically this year, you can expect 400 founders, 200 VCs and M&A partners, 50 LPs, and more than 100 high potentials, young graduates from world-class universities. And maybe to end up my long answer, I'd like also to share a bit the excitement, because I think it's really at events like Relevation that the future of the built environment is defined in a way, because it's where some of the category leaders will get the financial supports that will allow them to dominate the market. And so there is a huge momentum. And so probably this is what excites me the most about Relevation.
Terrific. Can't wait. Can't wait. We'll be there virtually. So let's start. Let's unpack, some of the core, most important themes that we're seeing in the marketplace. For me, I think that also the other thought about the pandemic was it was a tremendous accelerant of technology in the built world, but for the wrong reasons. But nonetheless, we saw adoption at levels that I had not ever seen before in my career in real estate tech. And I think now, as a result, we're entering just sort of the golden era of real estate, in that every asset class feels that it's being impacted by technology in a good way, and it's incredibly transformative in the way that buildings are being built, buildings are being and companies are being operated. So, Valentina, from your perspective, what are some of the big macro trends that you're paying attention to as it relates to the built world, and how technology is impacting the way the industry operates and develops and constructs, obviously?
I think the biggest trend is exactly that the real estate industry has awakened to the need to innovate from within. So if historically we have seen a lot of entrepreneurs coming from the outside of real estate, like ex-fintech successful entrepreneurs trying to kind of innovate from the outside, and that's where it was notoriously difficult. Now, what happened with COVID, just as you said, COVID accelerated adoption, and that created a trend of real estate corporates setting up innovations team, being acutely aware of their need for the right technologies to solve their biggest pain points, new pains as well that came on the market. And that's where you can start slicing and dicing all the sectors, and how retail is an acute need for the data to innovate their how they interact with their customers. Then offices, it's a clear need to repurpose some of the real estate, and to see how the flexible working environment is going to affect them. So you just residential real estate, also huge changes coming, and that kind of enters the mindsets of all real estate players through the cycle, starting from real estate developers and all the way through operators and facility and asset managers. Mm-hmm. So that, I think, the trend that is sort of started marrying finally real estate and technology. So this bridge has finally been built. So that is, for me, is a huge change. And as you said, 3 years ago, we were just sort of still looking with curiosity from the real estate side of things at innovations, and it was more of a nice to have category. Nowadays, it's more, all right, so these are my problems. What are the right technologies for me to adopt?
Yeah, well said, well said. Greg, your perspective today?
Sure, look, I tend to get overwhelmed when I think about all the trends and the themes that are happening, within real estate. I think first and foremost, I think the realization that PropTech is not a niche is very important. There is so much to unpack within PropTech. And I guess as an investor, we tend to get overwhelmed with the depth, the pace, and the diversity of innovation that's really coming from everywhere. And so when I try to think about it, I break it down. For me, it's, as you said, Michael, it's every single sub-segment of the market, i.e. every asset class, resi, office, logistic development is getting disrupted. And then within those, every single aspect of the life cycle of an asset, end to end, from the material supply chain to the design and architecture, to the construction, the operation, and the transactional side, are all getting turned on their head. And then within those, we believe there are some kind of important trends that are common to any of the sub-asset classes. Obviously, climate change is one of them, so it's challenging every step of the way for an asset, and it's challenging every type of landlord, regardless of who they are, where they are, and what they do. Second shift or second trend that we pay attention to is the fact that we're shifting from a landlord-centric to a customer, i.e. tenant-centric industry, and all the implication that it has in terms of how do you service your customers, how do you actually leverage the data that you get from those customers to increase your revenues outside the scope of rental income, in a world where rental growth can be challenged, and we have question marks about whether the rental market or the ability to increase rent is going to be as strong as it used to be. So therefore, you need to find other ways to monetize this privileged relationship with your customers. And then obviously with that, there are a number of different themes, around data, around fintech, PropTech, the transactional side. So it's really a lot to unpack, and more innovation brings more innovation. And what excites me the most is that we see really amazing entrepreneurs that have nothing to do with real estate that are making their way into the industry because they feel they can make a difference, they can move the needle, and there is so much to achieve within the segment. So for me, it's very exciting.
Brilliant. I think we could do like 10 webinars just on also those thoughts that you just highlighted, my friend. Ron, that's a tough act to follow, I know, but I'm sure you've got a lot of good insights, I know. What are some of the macro trends that you're sort of excited about today in the marketplace?
Well, if you look, first of all, I want to concur with what Valentina and Gregory said, but there's so many trends at this stage. I just want to pick one just to focus on because we can go hours and hours only on this topic. But there's so on the market drivers, you have first of all everything that has to do with consumer empowerment and the rise of energy communities. The whole market of energy usage is shifting, and it's being pushed through subsidies, and is being well motivated and also pushed through everything that has to do with tax and regulation. And what we see is that buildings are going to try to optimize their energy usage, which is obvious because they want to reduce the cost, but also want to contribute to a lower CO2 exhaust. But the one thing that I want to emphasize is they're not going to do that alone. They're obviously going to invest in artificial intelligence and everything that has to do with model predictive control to reduce that energy consumption. But they're also going to work on the energy markets with variable tariffs, with everything that has to do with peak shaving, but most importantly, also in load balancing together with other buildings. So the trend that we see is a building is going to optimize on itself, but it's going to cooperate with other buildings, going to form clusters to work together to make maximum use of energy, of renewable energy being created somewhere else.
Yeah, great, terrific, great insights. Idris, as we look to the event, the big event in June, and you've got some extraordinary speakers. What are some of the major themes that you're going to be looking to unpack at the event that you're particularly excited about for the audience to focus on?
Wow, what to pick? We'll have 77 keynote speakers. We'll have 43 different conferences, and I think all of them are very important. But if you ask me what are the topics that I think are the most exciting, and that's maybe a more personal answer, but I would say I'm particularly excited by the subcategory, the sub-asset class or the alternative real estate asset class like healthcare or logistics that were a bit ignored by Proptech so far. And I think where there is maybe a huge innovation potential. So we'll speak about that at Relevation, of course. We'll speak as well about the consolidation of the market, which is, I think, a very important topic with an ecosystem that grows year after year. I mean, that becomes more mature year after year with more and more M&As that we can see. And we'll as well discuss the VC landscape, which is becoming more and more packed with more and more different players, more capital available, maybe consequences on the valuation trends, etc., etc. So a big question is the VC landscape in PropTech becoming a red ocean, meaning an ocean where there is a lot of competition, where the access to deals is a big problem. So these are some of the topics as a teaser that we will explore during the.
Excellent, exciting. So listen, I don't want to turn this into an infomercial or anything like that, but it is important. It's important for me to understand and learn, and I think in the audience that you got to follow with the money to understand where the real trends and the next gen of real estate tech companies are going to emerge. So I would like each of you investors just to talk a little bit about where you're particularly focused on investing specifically today. So we talked about the macro. Let's just, if we could unpack a little bit about what you're up to, Valentina, what you're focused on, what you're particularly investing in.
Absolutely. So we are the VC fund that is back in Bridge UK, Second Century Ventures. It's our strategic investment arm of the National Association of Realtors. So by nature, we are looking for technologies that help real estate practitioners perform their jobs, being it property management or buying and selling or leasing real estate. Why I personally a huge believer that is the most value additive way of investing in PropTech. Real estate industry is not going to change overnight. So it's actually quite difficult to disrupt real estate, because as soon as you say disruption, real estate practitioners walk away. They say, okay, disrupt without us. And then how are you going to then access real estate as an asset class? So we believe in evolutionary approach to innovate in real estate. And that's why we're looking for technologies that help to address pain points of here and now of real estate practitioner. So I'll give you a very simple example. One of our very early investment was the company, which is hard to call PropTech company. It's arguably legal tech, but it made a huge evolution in real estate. That's a company called DocuSign. So those are like incremental value add solutions. That's where I personally believe, and that's our investment team as well, where we can help real estate industry to evolve the fastest. So, and then that's also where I can see the biggest frustration between entrepreneurs and the industry. Indeed, there are more and more innovators coming from outside of real estate to real estate with kind of solutions which they see as quick fixes. That like there is an end-to-end transaction management platform. And then they don't really see their adoption by real estate, because real estate see those solutions as nice to have. And I'll give you another example. So real estate within this end-to-end transaction management platform, they actually, at the time of COVID and going forward, they need a simple solution that helps them with remote property inspections. So it is a subset of end-to-end transaction management, but that's where the problem lies. So the industry frustration is always or often where entrepreneurs come to them, they believe that that's the solution that's going to be breakthrough, and they still don't understand how that addresses their pain points, and that's where kind of the thing collapses. So that's we invest in a very broad sense into Proptech. So anything that touches real estate and brings those marginal improvements, but at the same time, those solutions, they tend to be highly scalable as well.
Great, thank you. Greg, I know you're a prolific investor, and it's hard. I'm not asking you to pick, which of your children are your favorite, because you love them all, I know. But where is AO Proptech focused these days in terms of investment thesis?
Sure. Look, I think so. We try to focus on technologies that are resolving real issues, and on which their customers, whoever they are, whether they're B2B or B2C customers, can apply and draw down a ROI. And so that means, as a large enterprise landlord, what are the solutions that are going to enable you to expand your margin, i.e., optimize your bottom line from an operational and a cost basis. So everything around data-driven property management, IoT, and all types of solutions that will enable you to manage your assets better is something that we spend a lot of time on. Equally, what are the solutions that will enable you to expand your top line? And that's more with regards to monetizing the customer relationship and the tenant relationship by creating platforms, by leveraging this privileged trust relationship that you have with your tenant to potentially push additional ancillary revenues and services. So these are the things that are becoming must-have in a world where there's a lot more scrutiny about how do you leverage technology to optimize your operations. In a world where the real estate industry has been shaken, has been turned on its head, has been forced to ask themselves questions they never had to think about, and so I think these solutions are very important. I think what some people have potentially mistaken for viable solutions in the past were exciting, nice to have, fancy to talk about solutions that not necessarily solving a problem, and you'll find that those struggle to get the right momentum or the scale, or you'll find that the sales cycles are very long, or actually you'll end up realizing that you actually don't know who your customer within your customer is, and nobody's really assigned to look at those things. And obviously the elephant in the room is climate change, because it's just past the stage of being a must-have. There's really no choice, and so there is so much to do there, because you have obviously a lot of people talking about how exciting new technologies are going to enable us to build better, cooler building, more efficient building, whatever it is. But there's also billions of square feet of existing stock that's out there that we're going to have to take care of. It's not going to take care by itself, and it means capex, it means retrofitting. It's a massive pain, and so focusing on technologies that are going to be easy to understand, easy to implement, and not too costly to roll out are what is going to promote the right dynamic. So we focus a lot on that as well, because for us, we are dedicated to the climate topic. We really get out of our way, we get out of our comfort zone. We even closed the deal in space tech and satellite technology to map out the carbon footprint of buildings from space. I mean, I never thought I'd be talking about this a year ago. And so there's a lot of education on our end, but I think that's what's fascinating, is that we really constantly have to push the boundaries of what we're ready to do, what we understand. And I think that's the beauty of our space.
Yeah, we'll talk about another topic I wanted to get into at some point was climate tech, and your leadership in particular on climate tech has been inspiring. So really, really wonderful to see. Ron, what are some of the things that you guys are looking at today?
Yeah, we invest in smart building technology. Actually, everything that makes a building more energy efficient and sustainable, more pleasant to work or live in. So we don't do we not only do commercial real estate, we actually cover all asset classes, including residential, and everything that makes a building safer. And So if you look at technology, we're mainly in software, but we're also in hardware, but only if the hardware is being made smart by the software. For example, edge computing like devices, camera technology, access control technology. But mainly it's a combination between hard and software. And if you look at software, it's going to be everything that covers middlewares, IoT sensor technology, access control, but also, for example, location-based services and indoor location systems, heat mapping, that adds to workplace management. So all these different layers to make a building smarter is what we look at. These are seed and early stage companies, so mainly tech-driven, sometimes only on the first step of breaking through. So you see that these companies still gain additional features and additional markets while growing themselves and merging maybe with other technology companies.
Great, great. Idris, my friend, you wear so many different hats. Put on all three right now. And you know what are some of the parts of the industry from a technology, from a startup perspective that you're seeing getting great adoption, scaling, and I think the European lens is also really important for CREtech's large US audience to understand as well.
Yeah, so I think first it's important to mention that Europe has a very specific ecosystem because it's not one market, it's 27 smaller markets with different juridical framework, industry standard, language, culture, etc., etc. So it's a very specific ecosystem. You have 3,200 Proptech startups roughly based in Europe compared to 2,000 in the US as benchmark. So it's a very vibrant ecosystem, but we see that it covers a very heterogeneous panel of different solutions. And so we have divided it in 5 different categories: invest, finance, design, build, market, transact, manage, operate, to cover really the complete value chain of real estate. And we saw that 60% of all the Proptech startups are in the manage, operate, and market and transact space. So these are really the 2 categories that are the most populated, where you will have probably the consolidation coming first, where you have the most competition, where the maturity is the higher. So these are the space where you have the most scalability so far, I would say. But what I see as a huge opportunity is also the invest and finance phase, which has been a bit ignored by Proptech, although the fintech movement was before the Proptech movement. So it's a bit of a surprise. But we monitor only 150 solutions in Europe out of the 3,200 in that space. So it's still early, it's super young. And maybe just a side note about the maturity of the European Proptech ecosystem. So it's still very early because around 59% of the Proptech startups have less than 10 FTEs. So it's still very early in Europe. Still time to invest.
Great, that's encouraging. So I'd be remiss if we didn't mention the sort of the elephant in the room, I guess, and that would be valuations. Now, from my perspective, I've kind of wired as a cautiously optimistic fella, leaning always towards the optimistic and the sunny side of life. But running CREtech, I get to see a lot of stuff either before it gets public, not that it's insider, but people will tell me, we're about to announce this, we're about to. And you can't help but scratch your head these days when you see some of these valuations and some of the dollars that are going to these companies that, the multiples of whether it's, revenue or EBITDA, they just like, oh my goodness, this is not sustainable. This makes me worry that we're too frothy. Now, I know you're all 3 of you are very disciplined investors and would never suggest that you're not making very prudent and cautious decisions with your capital. But what are your perspectives today about some of these valuations? And I'm not just talking the SPACs, which I see, and I can't still get my head around that, but it just feels to me a little frothy. Are we entering a period where, we have to be concerned about some of these valuations, Valentina?
Yeah, thanks for the question, Michael, and thanks for starting from me, because I may have a tiny bit different view on the volumes of investments which are available. because I deal with early stage startups, and it's important to differentiate here, both by geography, US versus Europe, UK, but also by investment stage. So quite frankly, there was a flood of kind of the market, equity market in the US was really overheated with all their financial stimulus by the government. And ultimately, yes, we saw the emergence of SPACs, and that affected the economy and all sectors, not just real estate and Proptech. But then what you see ultimately, there is a competition. SPACs will be acquiring companies that are at pre-IPO stage. So yes, there will be a few founders who will get really lucky and who will probably be paid a little bit more than the fundamental value of their companies is. But now, does it really reach early stage companies? Does it really reach seed and Series A? And do remember that Proptech market is still young. So now let's move us back to Europe, where the majority of companies, like as you were saying, Michael, when companies were raising millions in Proptech space 3 years ago, that was kind of an event, right? So that means that now all those companies 3 years ago today, they are probably still kind of Series A ballpark. So they're still not really mature enough. And now what we see in Europe, there is a competition for companies that are raising like maybe like 10, 15, 20 million, but not so much for those that are raising million to 3. And like generally speaking, we see setup in Europe, but it's kind of different. There are fewer specialist VC funds in Europe than there are in the States. And that makes it also notoriously difficult for early stage Proptechs to raise, because if they come to generalist VCs do not necessarily have allocations to Proptech, or those are not that big, or they look for something deep tech. And deep tech is not really needed in real estate nowadays. So you don't really need to have AI startup with blockchain on top to be really innovative nowadays. So that what I see is really early stage startups in Europe, UK are actually struggling to get funding.
Yeah, Greg, you know, again, I know what a disciplined investor you are and how much homework you do before you pull the trigger on an investment, but I can't help it. And I see it where I'll hear of something that somebody's raising and there's 10, 15 firms chasing this deal with great speed. And I get concerned sometimes, about that frothiness. And again, I know you're completely antithesis of that, but what are your thoughts about sort of the marketplace in general heating up?
So look, I'll tell you, I love the market when it's my portfolio company is raising. So I have no problem with the frostiness when it's when I'm on the other side of the table. But look, I think I would be a little bit cautious, because I think we tend to say something is overheated or overpriced, and we usually do that by comparing to historical standards. And I think we can't do that nowadays, because we are in uncharted territories when it comes to macro and liquidity. I think we are at a time where there's never been so much capital available. There's also capital that's not able anymore to find a suitable home in fixed income, because fixed income is dead. And therefore, you have much more money that is pushing down the risk curve, and that's benefiting venture capital, which is considered to be more risky than some other asset classes. And then within that, you have the emergence of SPACs, which obviously there's been excess in SPACs, and I think what SPACs have done is they've shortened the perception from the market of the timing it takes to become a public company, and therefore now people underwrite that you can become a public company after 2 years of operations. And what that does is therefore it's attracting new players, larger hedge funds, $50 billion hedge funds that come and say, hey, I'm going to put a ticket now because I'm going to have liquidity within 2 years or 3 years, which was never the case before. I mean, venture is meant to be a long-term game. It's supposed to be 8, 9, 10 years. So when you shorten the timeframes, you attract even more money into this, because it changes the risk profile. So I don't think, for example, that SPAC, so look, not all SPACs are equal. There's some very good SPACs out there, very good sponsors that are doing the right thing, that are paying the right price and doing the right level of DDs. And you have the other guys out there that will overpay not by 20, 30%, by 3, 4, 5 times, and that will do DD in 48 hours, you can't compete with that because it's stupidity. And so any, let's say, reputable sponsors, and there are many out there, just don't have the same tools to fight this kind of competition. But generally, you know, I think that I don't have a crystal ball. I don't know where the market is going, but I'll say we all have to remember that venture is a very long-term game. We're not supposed to try and time the market or, you know, try to see, you know, invest at the right time. We're supposed to invest in category defining leader companies. And I think where the mindset has shifted also is probably 5, 6 years ago, if you were a category winner or leader, you'll be a unicorn, i.e. a $1 billion company. Today, if you are a category leader, you're going to be a 10, 15, $20 billion company. And so that allows people to be more valuation agnostic early on, because they will be able to underwrite a 10, 20, 30x, even if they're paying 200 million or 300 million instead of paying 100 million. So I think that's also something that it's not necessarily wrong. It's in the end of the day, we're there to back the outliers, we're there to back the business that are going to completely change the market they're in. And if they do, they will be multi-billion dollar companies. So for me, I think it's exciting, it's scary at the same time. And don't get me wrong, it makes my life very difficult, because I am priced out of deals because I'm that guy that tends to overthink. And sometimes it's very difficult, but I also think that the way the world is going, there's never, ever been a greater time to be an entrepreneur, where knowledge is distributed, where access to capital is distributed, where you can start a business from anywhere, at any time, wherever you are. And so I think that's going to attract so much talent into this space. And so I think we're going to see much more innovation, successful innovation in the next 5 to 10 years than we've ever seen before. And so for me, I feel like I'm privileged because, yeah, I might have a headache because I'm not sure if I should pay X or Y. But at the end of the day, I'm privileged to see all those amazing things. So it's about being disciplined and just trying to remember, we're not there to time it. We're not there to maximize by 10, 15%. We're there to back the category leaders, and we're there to look 10, 15 years out. And so that's what I try to remind myself on a daily basis.
That's helpful. Okay, I'm more optimistic now. Thank you with that outlook. And you're right. We have to remember this is a moment in time, but a very, very, very good, healthy time. Ron, your thoughts, and then I just love you to chime in after Ron.
Yeah, sure. We are in seed and early stage. First of all. Second, we are specifically outbound oriented. So we look for a certain technology, and then that we want to add to our portfolio. And then we look at the companies delivering that. We go outbound. Half of them is not even raising. So we have a different dynamics with finding these companies. And third, we're open-ended, like Greg is. So we are patient investors. We have time. We are not going to go into a rush. But yes, we see valuations rising. We are also stepping in at higher valuations that we think a couple of years ago wouldn't be even possible to think of. And we also see a lot of competition, even in the seed and early stage arena. It is not only that the money is flowing into later stage deals. Seed and early stage is a very, very competitive market, and companies having the right offering will have no problem whatsoever getting the money in at the right valuation. But in addition, we also notice, compared to a couple of years ago, that negotiations are not only about valuation, but also about rights that the companies themselves want to retain. VCs previously would have more rights on reserved matters in the board or liquidation preferences, etc., that are being negotiated more and more by seed and early stage companies, which is a new trend that I see compared to a couple of years ago.
Yeah. Adding on top of that, a few comments. I completely do agree with I think everything that was said so far. And from the European perspective, in 2019 we were monitoring 9 vertical PropTech VCs in Europe, and in 2021 there are more than 25. and new funds raising almost every month. It's really crazy. And so we also see that the PropTech space is really becoming a global category where generalist funds also want to invest, like Partech Partners, like ID Invest, etc., etc. But my reflection is maybe that this ecosystem becoming a bit overpacked in a way becomes more founders friendly, like Greg was saying, and in a way maybe it forces the VCs to reconsider the way they build relations with founders. From a more human point of view, it forces the VCs not to be arrogant anymore, because sometimes VCs can be arrogant, unfortunately. And so I think at the end of the day, it can be positive from the entrepreneur point of view. That would be my thoughts.
That's great. That's really great. And I think just from my perspective, my 2 cents is that I do think that the more players in the space is a good thing, because not just because of the different perspectives and the talents, but for what I'm seeing also is for a lot of these young entrepreneurs, back in the day, there were only a handful of choices, and they weren't always, to be honest, great choices for them. Now, with so many companies of different shapes and sizes and origins on the scene, you know, if you're an entrepreneur and you're entering this sector, you've got a wealth of great choices, which I think is really inspiring. I think the other thought for me is that, you know, I definitely see, and I think we all see a lot of consolidation happening within the ecosystem, and the big, well-funded are getting bigger and bigger. And at sometimes it feels like it's stifling competition, but the fact that you all are playing in the early stage ecosystem is incredibly important, and a message that really needs to resonate into the industry. That, you know, if you've got an idea, don't be you know dissuaded by these large rounds and these big valuations, because people like the 3 of you are looking for early stage and the next big idea, which is really exciting. So I think it's all good, and it's all just a healthy, natural evolution of the ecosystem. And speaking of which, the final topic for me that I just wanted to hit upon, and Greg, I'm going to start with you on this one, is, you know, we launched at CREtech Climate, which is all focused on climate technology, and recognizing that the built world is responsible for 40% of all greenhouse gas emissions. You know, we have a moral imperative, but we also have a financial opportunity to invest in climate technologies that will get the industry to decarbonize. You know, from your perspective, how are you looking at the climate technology in the built world at this stage, from AO's perspective?
So look, you know, it's probably the single most important theme that we focus on, because we believe it's become a very, very investable category, and B, because we believe it's our duty as a stakeholder in the industry to do what we can to enable this important transition, this necessary, vital transition of the industry. And so there needs to be a profound shift in strategy, in culture, and in investment. Not only because it's a necessity today, because there's regulatory pressure, there's customer pressure, there's capital markets pressure, but it should be embraced. And real estate companies today have 3 options, in my view. It's either you ignore what's going on, and you'll probably be obsolete and nobody will remember you in a couple of years, or in 5 years, whatever the time frame is. And I think this time frame is getting shorter and shorter. Option 2 is you'll do the minimum viable to just get by and be compliant with regulations and just get a pat on the back from your investors and the capital markets, and you'll get by. Or option 3 is you actually embrace this. You embrace this, you become proactive, you invest time, you invest capital and resources to adopt those technologies and to deploy capital into those technologies, and you'll become a leader in a follower's market. And so for me, you know, as investors, we're committed to make a positive impact by allocating a significant portion of the fund towards decarbonization, and every step of the way, as I said, from the material supply chain all the way to the operation and passing by construction and design and architecture. There are amazing things that we're seeing. And we have to get out of our way. We have to get out of our preconceptions. We have to be ready to invest earlier than we typically would, or to invest further away from our comfort zone, as I was saying, and dedicated the right amount of resource to do it. And for us, it's very rewarding because we feel we're moving the needle. And I don't mean it in a pretentious way. We just feel like we're making a difference. And personally speaking, it's probably the most exciting part of what I do, is just feeling that there's profit, and we're obviously there to generate value for ourselves and for our investors. And I'm not going to sit there and say I'm running a non-profit fund, but at the same time, whilst we do that, we can make a difference. And so we're embracing this really fully to the fullest, and I think it's only going to get better. So I hope to see more and more people doing this, less greenwashing, more people actually putting their money where their mouth is. And really, I think I don't want to hear about this notion that there's competition between investors. We should all be on the same side of the table. We should all try and support the bright ideas, the bright entrepreneurs, and allocate our capital. And you know what? If you're going to be forced to allocate a smaller check into a deal because that's what's best for the company and this technology, then just do it. It doesn't matter. I mean, yes, we all have our portfolio construction objectives and all that crap, but I think you eventually also have to think a bit further down the line.
Yeah, well said. Ron, obviously you're active in the space. Tell us your perspectives on climate technology today, and smart buildings, etc.
Yeah, two parts. The part that we don't cover, and I see a lot of things happening there, is everything that has to do with material science and the material that is used for making batteries, switching from lithium ion to lithium iron phosphate, etc. Or things that are actually benefiting the whole ecosystem on the material side. That's not what we cover. Obviously, what we cover has everything to do with energy usage. And we embrace the shift from fossil fuel heat generation to electricity. More and more gas is being replaced by heat pumps. That's going to be the trend that Europe also is pushing. And that is going to help make the shift to reduce fossil fuel usage. But that's going to put a lot of pressure on renewable energy and the balancing of that. And like I indicated before, this is something that we very strongly focus on, because in the end, it's about material science, and it's about the reduction of CO2 and the usage of fossil fuels. And second, it is all about using energy in the most efficient way, and all the technologies that we focus on are practically all related specifically to that topic.
Yeah, terrific, terrific. Thank you. Valentina, thoughts on climate technology, sustainability, ESG?
Yeah, we are looking at those technologies through the lens of real estate practitioner, and the way how the right technologies can actually increase the value of buildings. And we invested into a number of those in the past. So, for example, one of their tech solutions in the US, a company called CREtech, so they do install solar panels at their own cost. And that helps with the bottom line, and ultimately through cap rate, it immediately capitalizes into the value of the building, and they monetize their kind of input when the building is sold only. So it's a very long-term capital. So it's all about finding the right solutions that are commercially viable as well. And there are those are emerging on the market. So in Europe, for example, we have a company in our portfolio that helps with last mile delivery issue. So they built their distribution network that helps to minimize their pollution of the last mile delivery. So it's climate tech, mobility tech on the border, but for us it's as relevant as any other Proptech solution. So again, just marrying the needs of real estate industry and the best that technology can provide, and constantly educating both sides, because quite frankly, real estate does need more education on that front. So what's available, and likewise, technology startups, they need to be educated as to what are the kind of how to sell this wonderful technology into real estate. So it's we kind of serve as this bridge And that's why we also invest first through the program. So we have this reach as a scale-up program that ultimately makes those two sides talk.
Great, terrific. Idris, final thoughts on
Yeah.
climate?
So I'm really not an expert on that topic, I must completely admit, but nonetheless, a couple of thoughts. First, on the urban logistics and the last mile delivery, I think there is a tremendous opportunity to turn unused square meters, for instance, it can be parking spots, and to re-affect them into urban logistics hubs. That's something that is a trend, I think, in the US, and we haven't seen that yet in Europe. And from a more European perspective, we just closed the selection of the 50 finalists of the European Proptech Startup and Scale-Up Awards that we do every year. And 2 of the selection criteria that we use out of 5 are dedicated to the ESGs. And so we have seen a lot of very promising companies. We have actually published the results, so available. But we saw a lot of very exciting companies in the smart grid space or in the batteries to rebalance the peaks of energy consumption, or even in the prefab space, or even in concrete capturing CO2 emissions. So a lot of innovations that I wasn't really aware of, but I think it's also a rising topic in the PropTech space. We see more and more startups active there. So it's not only, I think, on the investor side or on the real estate corporation side, but we also see the founders more and more concerned about that. So yes, this is.
That's great. And I think, again, from my perspective, I think the climate tech, for all the reasons that you all talked about, is going to be so much more impactful, meaningful, and just massively larger than the quote unquote PropTech sector. So I think in a very short order, because again, like you all said, we don't have the time, and the time frames keep getting shorter and shorter. So for me personally, this is what I want to be my personal legacy, that, you know, when my kids ask me, you know, Daddy, what did you do when you knew, you know, what you knew, because you pay attention to science and you believe in it? Well, I did something. And if we can all collectively help, and I think it's what you said about raising awareness about the challenge and the opportunity the built world has, then we've really made an impact on climate change in a measurable, as Greg said, or somebody said, not a greenwashing way. So I'm really personally passionate about that topic. And so I think that's about the time that we got. I just want to say, Idris, Greg, Valentina, Ron, you've all inspired me. You've educated me. You've given me just great hope that the future of the real estate tech and the climate tech sectors are in great hands with all of your leadership. So thank you so much for the time, and I'll bring in Bethany to close us out.
Thanks, folks. That's it for us today. We have recorded this, so if you want to share this or rewatch any part of this, we'll have this on CREtech Plus at the end of the week. That's it. Take care, everybody.
Thanks, everybody.
You guys.
Thank you very much.
2021, baby.